So let's continue with our example here. Where we left off, we're still in, this is our 4 hour time frame. So down at less than a daily time frame, an intraday time frame. Of interest to day traders, in my public work, the 4 hour time frame, that's as low as I go typically. Below that level, you really are down in the day trader level. And for most investors, whether you choose to label it as being conservative or lazy, um, I just not all that interested in playing down at the day trader level. So I prefer to look at higher time frame charts, and that's exactly what we're going to do here. So let's pop um, out to our daily time frame and see what we see here. And just and this is just me. Everybody's different. Um, my mind, my eye, I want to establish some kind of structure when I'm looking at a price chart, and so um, that immediately jumped in. That jumped to my attention. And of course, again, it's the experience of looking at thousands of price charts. But this is a great example of, in this case, so now we've got price bumps into this horizontal support resistance level. In this case, the line, the support resistance level, is acting as resistance. And so price goes up, tests it, waffles sideways for, okay, we're on a daily chart. So, that's most of 2 weeks. If we talk about trading days, that's most of 2 weeks where price is bumping up against this resistance level, and then we get this plunge, that pullback, and I don't want to just say that it's so. Let's do a quick check. I'm going to do a Fibonacci retracement here of this move, and let me expand the chart here so we can see. And what is that, 50%? Okay, so we got a 50% pullback. Coincidence. Anyway, let's not go off on that tangent. But so anyway, um, and so now, after price spent 2 weeks bumping up against this resistance level, does this pullback 50%, and then in the process, so now we're talking about most of 3 weeks, 3 calendar weeks of trading time. Price goes on this big zoom, big gain. What is that? 1023 up to 1226, 1020. That's $200, $203. And so just, in a few, less than, about a month, that's probably about a month, 4 calendar weeks, price gained $200 right there, which is fairly remarkable. You know, and so let me continue where I was going on that tangent. Was I was backing out to a bigger. We started on our 4 hour time frame, This is our daily time frame, and we just looked at a significant horizontal price resistance support level, support and resistance level. And let's back up another time frame to our weekly. And so now we're looking at this is gold, spot gold in the weekly time frame. And so we're trying to in the weekly time frame, we're minimizing some of the fluctuation, some of the just, as chatter back and forth that happens down in the daily and lower time frames. And again, let's do it right here. Let's start with a clean chart. Nothing wrong with a clean chart, and actually, let's do this. We'll go back to a monthly time frame chart, and I'll show you. And some things I do not even aware that I'm doing them, and so I'm trying to be very conscious of, okay, what is it I am noticing in this chart. And so there's the first thing that I notice in this chart is that I've got this horizontal support and resistance level, and my eye is drawn to that. And then as a follow-up, the second thing that catches my eye is this movement. That's a dramatic price movement from there. And of course, this is the 2011, that was the peak of the bull market in precious metals back in 2011. We got this big bear market that ended in, late 2015, December of 2015. That was the end of our big bear market in the precious metals. Let's get rid of that line, and just so we're all on the same page, let's go draw right there. So here we are in the end of 2015, December 2015, and notice that on either side of that vertical line, the behavior in this chart is distinctly different. Gold on one side of that vertical line is acting in a certain manner. Gold on the right side over here is acting, clearly acting in a different manner. And so I don't want to make sure that we're all on that same page. That's the big price movement that caught my eye. We certainly want to talk about that. Let's just do so now. When I see a big price movement like that, I'm guessing that at either end of that big price movement, the two price points, the two price pivots are likely to be significant when I go to when I go to draw my Andrews pitchfork. Those points are likely to be significant. And so let me highlight what I am saying here. Those two, that price high, and let's go do the same thing down here. Hello. Let's draw another ellipse. And so same thing here. This price low here, those 2 points are likely to be the pivot, two of the pivot points that I need to draw an Andrews pitchfork. And so now let's just go do that since, I'm sitting here babbling. Blah, blah, blah. Here's my pitchfork, and I'm going to grab that as the origin, and I'll explain why here in a moment, but let's just draw the fork. And let's put it into original. I always prefer, and this is just personal preference kind of thing. An upward sloping fork is blue, downward sloping fork is red, and just it doesn't matter one way or another. It's just a consistency thing, and so I try to be consistent in my work. Let's delete this line. And see, so this fork doesn't, I can see that price is interacting with this lower median line here, but the fact that price has dropped below that line, yeah, I'm not real keen on that. And so what I'm going to do, I want to look at the modified Schiff version of that fork, which doesn't look too bad. And then the Schiff, you can hardly tell the difference. And so just me, I prefer mod shift. I keep throwing a T on the end of that. And let me change the color of this, and do that so we can see the price. Yeah, there we go. And then same thing, let's go over here. So what we have done here is we started with an Andrews pitchfork drawn from 3 pivot points, price points, and the first two, these pink ellipses, as I was saying, those 2 pivot points caught my eye immediately in this price chart after I drew this horizontal support resistance level. So remember when we started on our empty chart, our naked chart, and let's just do that. So when we started on this chart, me as a technical analyst, I need some structure, my mind, my eye, trying to make sense of this price chart. I need some structure to work with. And so that's what I'm doing here is, okay, first thing I did was to draw this horizontal support resistance level, and it's clear here why I did that. We can see here price testing that level as resistance from the underside. It finally gold gathers enough energy to push up through that resistance level, and now in February of 2010 it tests that support and resistance zone as a support, and then moves off and throws on, what is that, 1054, 1900, 1100, what's that? That's 800, $850. So resistance here, breakthrough, tested as support. Let's add $850 to the price of gold. And I think that's a good point to pause this video, and we'll see where we go from here.